Money supply out today, private sector credit extension as well, and both numbers coming in below consensus. We had the PACE up 5%, consensus was of 5.8%, and money supply coming in at around 5.2% with a consensus forecast of around 8.5%. So clearly both sides disappointing somewhat. What does this spell for the money supply scenario in the country? That said, private sector credit extension looking slightly better, so perhaps a bit of good news.
Morning, Eleni. If you just look at the data, the moderation in private sector credit extension was unexpected. It did come in below market expectations, and that was in large part, in our view, due to the fact that there was a moderation in growth in mortgage advances. And mortgage advances account for about 50% of total private sector credit extension. So that moderation in mortgage advances, and that would be to households specifically, actually had a big effect on the number. But what was encouraging was that the growth in other loans and advances, which is normally used as a proxy for corporate credit demand, actually accelerated in January, and that bodes well for fixed investment intentions for 2011. So in our view, this is just a temporary setback, if you will. We continue to believe that credit extension is going to accelerate this year, underpinned by very accommodative monetary policy and an expected improvement in economic growth.
Nomvuyo, is there a very strong performance, or a relationship rather, between the use of credit and the performance of the local currency? We could say that the more credit extension we see, the greater the pressure on the trade accounts, and perhaps the worse the performance of the local currency. Does that mean a weaker rand down the line?
Well, Eleni, the relationship is thought to be between money supply growth really and the currency. Over long periods of time, if you allow excess growth in money supply, it should have an effect on weakening the currency. But I don't think that if you look at the short-term movement of the rand or short-term movement in money supply, that there is actually a relationship in the short term. So I wouldn't place too much emphasis on just looking at January's numbers and trying to draw implications for the rand from that.
Just looking at the money supply scenario relative to inflation, yes, we're seeing external pressures coming to the fore with food inflation and higher petrol prices as well. But if money supply does not increase in the country significantly, does that mean a lower inflation outlook, despite the fact that we could see external pressures coming to the fore?
Well, it certainly could be indicative of a slowdown in GDP growth. That would be because the economy simply isn't growing as fast, and so the demand for money is perhaps less than one would have expected. But again, these relationships tend to play out over fairly extended periods of time, certainly not over a year or even two.
I've given you enough time to ponder over the local currency, I think, Nomvuyo, and looking at the rand, we're sitting at below 7 rand to the dollar. We're sitting around 6.98, also against the greenback. Strength coming to the fore. It seems that we're tracking the likes of the Australian dollar, given the fact that it is commodity linked, and we have seen gains coming through for commodity linked currencies. And then also on the other end, we've got emerging market woes coming to the fore as well, geopolitical tensions in the Middle East and North Africa. To what extent is that going to affect sentiment towards the local currency?
Well, those are certainly going to be big issues for the rand this week, Eleni. We have seen volatility subsiding despite the fact that there's no conclusion in Libya. But the rand at this point seems to be benefiting from firmer equity markets and that subsiding in volatility, as well as firmer commodity prices. So for the earlier part of the week, we think that the rand has still a strengthening bias. If rand bulls manage to push the currency below 6.96, then we think that it could move as far as 6.87 in the short term.
Nomvuyo, let's touch on when it could weaken. We've got a lot of data out as well, trade balance, budget balance as well. We're looking at the US, that also is going to be releasing some interesting numbers later on. We've got Eurozone, CPI as well. To what extent is the rand going to be impacted by the volatility in some of the data that we could see?
Well, certainly for the rest of the week then, we think that the rand is going to continue to take its view from international developments, particularly the oil price. The main risk events would be the ECB's monetary policy decision later this week, as well as official unemployment data out of the US. That could cause some reaction on global markets if the data goes the other way, beyond, opposite to what markets are expecting, and that could certainly be a big risk factor for the rand, but that is not our base case scenario. And in the short term, we think that the rand has a strengthening bias at this point.